Saturday, everybody. Hope everyone had a great trading week. We had some pretty great success this week with Lululemon and TTD, and then even an okay play on Rivian. Another 100% week. So just wanted to say, hope you guys all crushed it too. I want to say thank you to everyone for the hitting 4,000 followers on YouTube. That's a huge goal. So happy we hit it so soon. Thank you to all you guys subscribing, hitting the like button, leaving comments. Really means a lot. And with that, you got me. You hit the 1, 2, 3 like total. So we're gonna go over all the stocks on my watch list, and I'm gonna just mention a little thing about how I like to treat each one. If it's something I just watch for a general feel of the market, if it's something I trade actively, if it's one of my favorites, and we'll get going. So first up, Apple. Apple's been a pretty good mover as of lately. Normally the options, I don't like to commonly trade them just because you don't really see a big move in them, especially after they're split. But Apple, I really like that one. Keep it on your watch list. Great indicator of the market. Their earnings, even as I mentioned on Twitter, saved the market from going down. So Apple's a good stock to keep on your watch for options. Airbnb. I've had a lot of success with Airbnb. It's a really good mover. Lately, the options have been a little bit expensive for my liking, but when I'm looking for an option, and I guess I should say this for about the watch list too, these are stocks that I think move enough to make the options worthwhile. I don't want to be trading $10 or like $12 stocks to get an option move. I want to be trading closer to like $75 to $100 stocks for my options. So Airbnb, right in that like $150 spot, is a really good mover. It's a little news driven right now, so I haven't been touching it as much lately, and you know that on the Twitter. So Airbnb, another one to keep on your radar. Affirm. This is the last one that toasted me with that bad news, but Affirm is a good mover. You often see like 5 to 7% moves, so it's pretty lucrative to play with options. I would prefer it to be back up closer to like the 70-80 range for my liking, just because that's where the risk reward starts to get a little bit better in the options place, because it's so volatile. You're not going to necessarily see those huge percent moves for your options, but you can see it in the stock. So Affirm, another good one to have out there. AMC is only on my watch list so I can see when memes are starting to run. I don't like the pricing of the options. I think the market makers have them set up very well to make buyers of options losers. So the stock is too cheap. Like I said, $15 to $20. That's not the type of options I like to play. I like to play the ones that are like at minimum around $70. That's where the value is. But AMC is a good indicator to have on your watch list to say like, memes are running today, so what's that going to be a reaction of? So AMC is on my watch list more as a indicator or health of the market or health of the meme stocks. So it's there as a what's going on stock on my watch list. Oh, and also I'll mention before I get going here, all these are in alphabetical order. So if you wanted to go back and forth to see where it's at, you can just scroll forward and back on the video to get where you want to go. So AMD. So semiconductors, red hot stocks for feels like forever now. So all the semis are great to have on your watch list. They always react well to news, either the upside or the downside. So pretty much very easy to trade the technicals. The options are all right in the good zones, like AMD above 120 now, so well above the zone where you like to trade them. AMD, great one to have on your watch list. Like it a lot. Amazon. So Amazon's a tricky one for options because they're just ridiculously expensive. So I don't personally alert Amazons a lot, but if you're looking to trade Amazons, normally once you get about halfway through the week, they start to become more attractive opportunities for the risk reward. So, but it's just like Apple. All of FANG, for that matter, is a good indicator of the relative strength of the market. So if you see Amazon running a lot during the day and you have one of your tech stocks that is lagging, that might be a good one to go and say, hey, what's going on here? Maybe I can take a look at it for an option play. So Amazon, again, don't love trading options in it, but I will on like Wednesdays to Fridays. Later in the week is better for just what I like to do, but great indicator of general health of the market. Boeing. So Boeing's a good, same thing. Great indicator stock, but has been a little bit overly news driven lately for my liking. I haven't alerted many Boeing plays lately on Twitter simply because there's so many what almost feel like last minute at the buzzer news articles getting released, and I'd rather be playing a stock on a technical or like a news event that I can anticipate happening, not every other day some news article coming out that someone canceled or bought planes. So it's too much whipsaw on just news, and it's hard to, even if it's at a supply or demand zone, even if it's at some moving average, even if it's at whatever indicator you want to have set, if a news article comes out, the news trumps all indicators. So don't worry about that. If you like Boeing, it does trade options very well when it starts to move, and if you are on the right side of the news catalyst, you can get huge movers. But it's not necessarily the type of play I love, but I do like to have it on my watch list. Alibaba. So Baba's a good one for just Chinese stocks in general to see kind of what the general sentiment is. It's right around that $100, $120 range, somewhere around there, if I remember correctly. I don't often trade it, but every now and then I'll give the Chinese names a look. But if you wanted to see like a general strength of China, it's a good one to have on your watch list. The options move good enough that when it's time to play them, it's there to be played. So I have it on there. I don't trade it that often, but when opportunities arise, I always give it a look. Beyond Meat. I used to trade Beyond Meat a lot. I think maybe when I first started Twitter, I might have done a few alerts on it. But lately, it has mostly just been there to see. It's probably close to falling off, but it does. The options do move when it decides to run, but it's close to falling off my watch list. I'm not really a huge Beyond Meat trader anymore. I liked it more when it was in the $100 range, but kind of down in this range, it's kind of run the risk of falling off. But some people make a lot of money on it, and some people trade the options well, so I figured it was worth still keeping on my watch list and keeping mentioned to you guys. Caterpillar. So Caterpillar is my preferred down name to play. So I like it a lot better than Boeing because you don't have to worry about so many news articles happening that impact Caterpillar. Caterpillar either is going to move or not move based upon what's going on in the market, what's going on with the stock. It's not going to have some last minute, this manufacturer ordered 500 tractors or whatever at the last 5 minutes of the day or 30 minutes before market opens. It's a pretty consistent stock. It tends to move in the direction that hold its directions. So I like Caterpillar a lot as my preferred down name to trade. Chewy. So Chewy has been this Friday it moved a lot. So it's a good mover, but it's starting to get down where it's a little bit too cheap for the stocks I like to trade. I really loved Chewy when it was in like the $70, $100 range. It was a great Friday play because it had great reactions. I mean, it had a good reaction on this Friday, but the contracts just aren't really around the price that I like and the move that I want. But there's tons of money to be out there. It's a good mover. Works well for options. Chipotle Mexican Grill. So I like the food more than I like the stock as of lately. It was a lot more attractive opportunities in the hundreds, but there's still good opportunities to make money in the stock. It's a very thin OI. It's open interest in the name. So it's kind of I like it to have on my watch list, but I don't really alert it lately simply because the moves haven't been as consistent, and if I'm going to alert it to the following as a potential play, I don't want it to be a overly ran up name, so you probably won't see me alert Chipotle often, but it is a good stock if you want to just do some technical moves and play the options in it. It does work, but for me, I'm not quite in love with it anymore as my options preferred choice. Coinbase. So Coinbase is a really good one. There's just a lot of contributing factors to it. And, well, not a lot, but you always got to worry about what Bitcoin's doing with coin. But to that, you can use Bitcoin as an advantage to play coin. The options move really well. It's a nice price stock. It's around that $180 range, $200 range. It moves really good. You've seen last few weeks like 10% moves every week. So the value is there for the options. If you're taking those chances, it might go in the money and you might get those big like potential 500% plays. Those are the type of plays you like to find. So coin's a good mover. I like it better than Ride or Mara simply because it gets the same reaction. If Bitcoin runs, Ride and Mara run, but Ride and Mara are $20 and $30 or $40 stocks. You're not going to see those extra 20-point moves where you can really start to get some juice on your options. So I like coin as my preferred like Bitcoin sympathy play. Salesforce. So I like all the cloud names. I like to keep them kind of on my radar just to see what's going on. So Salesforce, CRM, pretty good mover. Not my favorite, but I like to have it more as an indication for the other cloud stocks I prefer, which I'll get to those later through here. But good. Just some people like to trade CRM a lot. It's a little bit lower open interest name, so be careful about it. But overall it has the movement in the stock to work. All these stocks that I'm mentioning here, they all have the potential to move like 5 to 7% at any given week, and that's kind of where you want to be for an option. You don't want a stock that's just going to like steadily climb 1 or 2% a week or like 2 or 3% moves. You really want like that 5 to 7% weekly movement to get that to be worthwhile, the risk reward for you to trade options in it. Disney. So Disney has been it was consolidating for a while before that big earnings sell-off, and then it had those spikes back up. I haven't traded it as much often, but the contracts are pretty decently priced. It does move good. I just haven't really had a huge interest in playing Disney lately, simply because I think there's better names to play out there. But overall, it's still a pretty good one, and I like to keep it on my watch list just to see what's going on with the reopening. I like the reopening stocks and the closing stocks, so Disney's a good one to keep out there. I just haven't traded it quite as often lately. DraftKings. So DraftKings, it's another one that's pretty close to falling off the watch list. It's down there in that $20 range. There's moves that'll come in it, but you're not, like I said, I don't really want to buy an option for 20 cents and watch it go to $1. I'd rather buy an option for $1 that has the potential to go to $20. So it can move. The movement is there. It's mostly there as an indication of growth stocks and these potential buyout names, but not really in love with it for options. I've done alerts on it before, but I haven't done an alert or even any plays on it in months, so it's pretty close to falling off, but I have it on there. There's money to be made in it. It's just not one I'm quite in love with anymore. Same with Docusign. Docusign, before that big sell-off, I would go and trade every now and then, but the open interest is pretty low, and there's better movers out there, I'm starting to think. So, these last two starting to get a little bit, don't like to trade these anymore. There's better names to play, because you'll see this list is about 60 stocks long, and I like to keep it closer to 50. It's gotten a little bit bigger. This is across 5 years of trading, so kind of want to keep it condensed. Facebook, soon to be Meta. Facebook, another FANG name, great indicator of the market. Facebook moves good based on, if it's good news, Facebook moves good. If it's bad news, Facebook moves down bad. So it gives you all the upside, downside moves you want. They're big moves. They're strong moves. There's money to be made in options, huge money to be made in options. So any FANG name, there's always that good potential of movement, and there's always going to be high open interest in it. So Facebook, another really good one to play if you're wanting to get your own watch list built. FedEx is another good mover, right around that $240, $50 range, right where you want to be. The options aren't that expensive, but the moves are rarer, if that makes sense. So you might get that nice 5% move in FedEx, but it might come on one day instead of a week, and if you buy on the wrong day, you might kind of get chopped around. So FedEx, I'll alert. I think I've only done 1 or 2 alerts on Twitter, but when it works, it tends to work really well. It's just if you can get that timing right. So good one to keep on there. If you have any like indication of like, oh, holiday season, people are going to be buying packages or shipping more stuff. Good mover, good indicator. Keep it on mine. GameStop. So this is my preferred meme stock to watch. So I have done GameStop options. I actually did GameStop options back when it was around $60 on the run up, and that was really fun. So I might be a little bit biased, but overall, GameStop at that $90, $100 range is a lot more attractive than AMC at the $15 to $20 range. Simply because if memes start running, and let's say you had like a GameStop 120 for $2 or $3, and it runs to 150 on a squeeze, you'll get that 2 or 3 to 30. If you had AMC 20 options for $2 and it runs to 25, well, you only get 5. So there's a lot more risk reward in GameStop if you're looking to play memes, simply because the underlying share price is higher. If I was looking to buy like shares for a meme stock, I'd probably buy like BlackBerry or AMC. But if you're looking for just like the squeeze play, where like you think that memes are going to run on one particular day, I think GameStop is a much better choice of an option, and I have had success in it in the past. So I like GameStop as my preferred meme stock to play, simply because the underlying share price is the highest. Google Alphabet. So Google is another one of those similar to Amazon. The contracts are really expensive, so they're difficult to play earlier in the week, but as you get later in the week, the contracts become much more attractive. I'm a little concerned with the 20-to-1 split of how the movement will work. So that's a huge split down. So Apple was only a 4-to-1 split, and of course the Google share price is higher. So it'll be interesting to see what the pricing of Google contracts end up being after the split. No matter what, it's going to stay on my watch list as a FANG indicator, and it does move really well as of now. I'm a little curious to see what happens after the split, if it's a common trader or not of me. Goldman Sachs. So of all the bank stocks, I mostly just watch Goldman Sachs. I know a lot of people trade Bank of America or JP Morgan, but Goldman Sachs, I think it's just more attractive to me at the higher share price. I like kind of higher share price names simply because when you catch the big runs on like a Friday or the end of the week, they can be much more lucrative than trading a $50 stock from 50 to 51. And they're all connected. All the banks, if rates move, are going to move. If all rates go lower, all the banks are going to move. So same as meme stocks. You just basically want to pick the one that you understand and prefer the most, and then let it run. You could pick any bank stock. Mine just prefers to be Goldman Sachs, and it can all have good success and work very well for you. Home Depot. So Home Depot is a name I really like a lot, and it feels like it was always going up, and it finally slowed down these last few weeks. But Home Depot, always a good mover. Same as Lowe's. So Lowe's and Home Depot kind of go hand in hand. I'll get to Lowe's later. But when the market's strong, tends to be the strong. Home Depot tends to move more up than Lowe's does, simply because this is also my biased opinion, is that I think Home Depot is a little bit better run than Lowe's. So if market's running, Home Depot might be up 4%, Lowe's might be up 3%. So there's a little bit more juice you can get out of your options playing Home Depot. So like it a lot. Good one to have on there. Robinhood. Robinhood, I was a lot more interested in when it was like closer to 30, and that was simply because I was watching it go down. So now around like that $12 range, close to falling off the watch list. Not a ton of interest in it anymore. I have played lottos on Friday in it that had pretty good success, but it's starting to get too cheap for my liking to play options, and I don't really have any interest in owning the stock either. IWM, so indexes, have the indexes on my watch list. So quick and short, indexes move like indexes. Always good to have the indexes on there. Play your names ups and downs. Use the indexes, support zones, resistance zones. Play them however you want. I think there's better names to play personally than 0 day to expiry, SPY, index, IWM calls. So good to have as a general health as the market I don't really prefer to play them. Lucid Motors. So Lucid, I liked it more closer to 40 and 50. I think I pretty much have only taken Lucid puts when it was above 50 for the downside, because that's where it was more attractive to me. There was money to be made on this big pullback down, and all EV stocks in general are very volatile and good movers. But if you're looking to play EVs, I mean, Tesla's high at 900 something now. So Lucid is a good mover. I'd prefer to see it get closer to that $40, $50 range before. I mean, that's a long way to go back from 25 where it is now, but I have it on there. I'm also looking at commons in Lucid. If it really breaks down far, like 20 or lower, I would probably buy commons. If not, I can just play the options and be satisfied. And speaking of that, as options traders, you're just here to watch the moves up and down. I don't care if a stock's moving up. I don't care if a stock's moving down. I care about making money. So Lucid is a good mover. It's a little bit cheaper than what I like to play right now. So I'm going to wait and see if it can kind of get back in that range to where I can more commonly play it. Lockheed Martin. So all the rising tensions across the world have not given an alert on Lockheed Martin on Twitter, but before I became, I guess, the algonaut on Twitter, I did trade Lockheed Martin a lot. It's a good mover. The options, I think, are pretty affordably priced and pretty reasonably priced for a $400 stock. So I think it's the value and the options are there, and the movement in the underlying stock is there. So it's a little bit news heavy now, but I think it's a good one. Keep this one on your watch list just as a general. You can use it to kind of hint the tensions of the world for other names as well. Lowe's. So like I said with Lowe's and Home Depot, very similar companies, move very similarly. Lowe's, when market's going down, it tends to go down a little bit harder than Home Depot. So I like to play Lowe's more to the downside. I like to play Home Depot more to the upside. So Lowe's and Home Depot kind of go hand in hand for me. So that's pretty good there. Let's go to the next one. Lam Research. So Lam Research, like all chip stocks, very, very good mover. Very red hot plays all year long. But the problem with Lam Research is the options tend to be almost perfectly priced for the moves that can happen. And what I'm saying there is it's difficult to get a really good Lam Research play. It's much easier to see a nice like 100, 200% move in an AMD or an NVIDIA than it is to see Lam Research just rip face and run all the way to the top. So use a little bit of caution on Lam Research. Lululemon. Lululemon, I probably have had the most success in the stock market trading simply because it's just such a good mover in my opinion. Lululemon can have 40 or 50 point weeks, seems like all the time. Like the options, they're pretty low open interest. So if you time it wrong, you can get burned on them pretty bad. But when they work huge. Like even this week, we had that Lululemon call go from $1 to $7. We had Lululemons earlier in the year go $1 to $15. We had Lululemons last year go $1 to $20. They just, when you can catch the moves are so intense, so big that really, really works well. So Lululemon, low open interest, mid cap stock, but man, does it move good, and I really, really like it a lot. If anyone works at Lululemon, I'll be your astronaut sponsor. Great company, up and down, upside, downside, movement, everything. So that's a biased opinion, but that's my biased opinion. Make a ton of money in Lulu. It moves really good. On to the next one. MasterCard. MasterCard, it's just a higher share price than Visa. Visa and MasterCard move almost identically, so I just picked MasterCard as my preferred one to pick for the credit card companies. So good mover. I think it's pretty interesting. So good one to have. I haven't done any alerts on Twitter of it. I think it was prior to my Twitter times when I last played it, but I kind of keep it on there. It's just an indicator. Banks also move good. Like I've done Goldman Sachs when MasterCard was also in a tradable range based on some news. So it's just a personal preference. Like, it's whatever looks and lines up nicely. You can use the banks, you can use MasterCard. I do think it's a pretty good company. So it moves good. The options are good. So worth having on there. And like I said, you could also have Visa, Moderna. So Moderna is a pretty good mover. It is pretty heavily news driven. We've had pretty good success with options given the alerts. The prices are pretty good. Moderna and Pfizer. Pfizer's right on that edge of the range I like to trade, around $50. Like I said, 50. I really prefer 70 to 100 at a minimum, but if they're good enough movers, I can settle for 50. So Moderna at 150 moves decently, a little news heavy, so don't alert it as often, but overall, I enjoy having it on my watch list. Microsoft. I have not given many Microsoft plays on Twitter, but it is a very good mover. It's another one of those core big tech stocks that you can use as a general health of the market. If Microsoft's running, it's very unlikely for the market to break down. If Microsoft's breaking down, it's likely to drag the market down. So a lot of the FANG names, the ones I prefer to trade the most are probably Facebook, Nvidia, Netflix, and Google. Just because, I guess, Microsoft's in there too, but a lot of them are just there to be general health indicators of the market and then use them to make the plays you want to decide. And that's kind of what I use Microsoft for. I've tried to do a few Microsoft plays, but they just haven't quite lined up on Twitter when I've gone to give the alert. But I have always give Microsoft a look during the day just to kind of see how things are shaping out. Netflix. So Netflix has been a pretty awesome mover. It's just difficult to time up when the moves are happening. Like the Ackman news that came out and shot it up that huge, almost $100 in a couple days. It would have been amazing to bet on that run. The options were priced very cheap for that run up, and you could have just made a killing. And same thing, when it breaks down big. So there's a ton of money to be made on the call and put side. You can buy these options on Monday, and they can run all week. It's a very, very good mover. It's not overpriced options like Amazon and Google early in the week. So good FANG name, good overall health. Not as great overall health actually as like a Apple or an Amazon name, but overall you can use as a pretty good indicator. ServiceNow. So ServiceNow, another cloud name. I don't trade it as often anymore. I have given an alert on Twitter that I actually don't think worked out as well, as I would prefer Snow as a trader for my preferred cloud stock, simply because I think the open interest is better, the movement is a little bit better in Snow. But ServiceNow, good in all the clouds. You can kind of use as comparison to see if they're strong or weak, and then really use that to make your decisions based on there. Nvidia. So Nvidia is probably my favorite chip stock to play, simply because it's the leader. So in the market, leaders lead and losers lose. So same example going back to Home Depot. When Home Depot runs, it runs more than Lowe's. When Nvidia runs, it tends to run more than all the other chips, simply because it's the leader. When people think chips, they think Nvidia first and then everything else afterwards. Great upside move, great downside moves. The contracts can be a little bit high, but it tends to move enough to make the contracts worthwhile. So Nvidia, I would think, would be a core name that you should have on your watch list. Pfizer, like I said with Moderna, a little news driven, but overall it moves good enough and the price is good enough to really make it a worthwhile name to trade. So Pfizer, Moderna, about the same thing. Good movers, good traders, worth having on there. Pinterest, I liked it a lot more when it was up around 50 to 70 range. I don't really love it anymore down here. I have it on my watch list. Same story with Snapchat, which we'll get to that. But having it on my watch list is just an overall indicator of growth stocks. Haven't taken many trades in it lately, and we'll see what it ends up shaping out. I prefer Snapchat, if anything, and we'll get to that one. So Pinterest on there is an indicator, not really a trader. Same with Palantir. Palantir's on my watch list. I took some commons at 18.6 on Twitter and alerted everybody. Then we had that close under 18, so closed them out. But Palantir is an interesting name simply because where it has a future for something. It's always being picked up by government contracts. It's always in the news. People are always talking about it. But how long does it take to get to that future is the question. It doesn't move good enough week to week to make options very attractive, and especially not at this $13 range. But if you ever saw like sub $10 in Palantir, I would probably take a position in it, and that's why it's on my watch list, just to have it out there as something to be a worthwhile. If I miss the run in Palantir up, I'm not going to be heartbroken. I'd rather have my cash free on hand than be sitting in a stock at this point, simply because I don't know which way the market's going to go, if it's going to go up or down. So Palantir's there as a potential common buy watch for me, and with when it was closer to 25-30, you could almost justify doing the options, but down at this range, I think it's just too cheap to really make it worthwhile. Same with Plug Power. Plug Power was another name that when it was like closer to 40, I traded it, and I think I've even given an alert on Twitter about it. But down at this range, it's not really that attractive to me anymore, but I do have it on there just as a general indication. I know FCell ran really hard a while ago, and so did Plug, but not really an active trader for me anymore, mostly just kind of there as a observer. Peloton I did trade when it was close to that $50-$70 range, and even when it was back in the hundreds. But now it's so news driven. There's so many leaks, so many everything's coming out. It's a good mover if you're wanting to play some catalyst, or like you think potential news is going to happen over a weekend. Like it's up 30% now based on some buyout rumors. So if you want to play those type of names, it's a good name to play, and it has the price of the options are decent for the 30% move that just happened, and even the 20% move down whenever the news broke. But it's starting to get a little news heavy for my liking to play. PayPal. So PayPal was on there after the first Pinterest fiasco. I took some plays in it that didn't work out too well. But since then, just kind of been watching PayPal steady decline down. Not really too interested in playing it quite yet, especially after this fallout of earnings. Gonna let the dust settle. It's still in a good range around 100 plus. So it's attractive for options. Just I'm going to let the dust settle first before I try to make any assumptions on how the movement's going to work. Roblox. So Roblox was one of my biggest options plays ever after, like a normal option after GameStop. So I had the Roblox earnings, and where I sold out at 20 on 1 to 20, but the contracts ended up running to 45, and it was just incredible. And even down at 60, the contracts still move really well. They're still priced pretty well. Interesting to see how things shape up in this name, simply because it seems like a lot of the metaverse stuff isn't gaining as much traction as people want, but there's still room to run on the downside. But if it starts to get under $50, I'm going to lose interest in playing it pretty quickly, because then you start just getting these whipsaw moves that the contract prices won't really justify the movement in the stock, because a 10% move at $50, 50's $5, but if it was down to like 40 and it's only moving, a 10% moves at $4, that's not as much fun, not as much attractiveness as if it was like 90 or 100 and you can get a $10 move. And if you bought options that are a few dollars out of the money that only cost $1, then it's pretty attractive. But if you're buying a few dollars out of the money that are still $1 and they go $2 in the money to $3, it's the big upside swings aren't there, and I'm not as interested in it. Starbucks. Starbucks is there because I like the coffee. I like to see what the coffee company's doing. I don't think I've ever given an alert on it. I think I may have done one play on it. Mostly just there as a company that I like. I like going to Starbucks, getting the coffee. I wish I had a better answer than that. But don't really trade it very often. No huge interest in it. Shopify. Shopify is kind of a better it moves similarly to Netflix, not Netflix, Amazon. Sorry, I've been going through these. Hope I'm probably talking you guys' ears off, putting you to sleep. But Shopify, good mover. Options are a little bit more affordably priced than Amazon for the moves. Still tend to prefer a later in the week play, like Wednesday and after. Don't really want to buy Shopify calls on a Monday and ride them out all week, just because I don't want to hold all that premium. But overall, gets good moves similarly to Amazon. Use it as a sympathy play to Amazon, so works out pretty good. Snapchat, I used to be one of my favorite stocks when it was around $60, and now it moved it moved great on earnings, but the price is a little bit low for me. I do like trading Snapchat. It's a good mover. I'd much prefer if it got up to like 50 again, and then it's a more attractive opportunity for options. 35, 40 range, still a little bit low for my liking, but there is good money to be made out there, and they're cheaper options. It's just if you want to play them or not, and it's not something that I necessarily want to do just because I don't really I preferred options at around $1, that not really the 50 cent, 20 cent ones. But looking forward to see what happens with Snapchat. Snowflake is a great mover. The options have been a little bit high lately, which is why I haven't been trading it. We had a really good move in Snow this week, but prior to the option price to the moves that were happening wasn't lining up, so I wasn't given any alerts on it. So we'll see how it shakes out. I do like Snowflake a lot. I think it's one of the better cloud companies out there. So interested to see what happens, and I want to see the option prices get a little bit more reined in first before I really want to start giving too many alerts on it. But do like Snowflake a lot. Virgin Galactic. So this is one of those names that I keep looking over and deciding, do I want to buy commons in it, or do I want to just not do anything? It did move pretty good, especially when it was in spiked to the 40s. I did do an alert on it before that worked out pretty well, but here under $10, the options are tough to play. Swings, I almost feel like it makes a lot more sense at this price just to buy the commons and hold it for. I think it's going to be a multi-year thing. I think it might be like a 3 to 5 year move before you really start to see any massive returns in space. I don't quite think it's worth it yet for any swing plays, option plays, but I do think as a common ad, it's starting to get to an attractive point, and that's why it's on my watch list. Spotify is another really good mover. Lower open interest name, mid cap, but when they decide to run, they can run hard. Given a few alerts on Spotify, but haven't done as much lately simply because the earnings was coming up. And so after the earnings, it'll be interesting to see kind of how it continues to move, if it keeps getting bought or sold, if those big percent moves sustain itself and it stays above that $100 range. I mean, happy to keep it on my watch list. Good play, good trade. But for these lower interest names, for me to alert them, excuse me, I really want to have a high sense of confidence of what's going on. So just want to get a little bit more confidence around what's going to happen with Spotify before I do a few more alerts on it. But overall, good mover. The S&P 500, SPY, SPX, pretty simple. Everyone has SPY on their radar. Everyone has SPX on their radar. People trade the 0 day to expiries all the time. Good indicator health of market. Everybody probably follows SPY. If you don't follow SPY, you're not a degenerate like us yet, but one day we'll corrupt you. Square, similar to PayPal, both pretty beat down money processing things. Still good mover. You can play Square to the up or the downside and get pretty good returns on it, right around that $100 range. Haven't done an alert on Square lately, but we'll see how it shapes. Now that PayPal is back down to Square's price, PayPal and Square I'll probably more interchangeably look at, simply because there won't be any real differentiation between Square and PayPal. What would be the preferred one to alert? Target. So Target is on here simply because Target over Walmart also is because Target moves a little bit better than Walmart, in my opinion. I think the Target moves are a little bit more predictable, and it tends to be a little bit greater of moves than Walmart. So the option's another mid-cap, another lower open interest option, but it does tend to work pretty well and move pretty well, and you can pretty easily pick news catalyst. So if it's like, oh, Black Friday's coming, might be worthwhile looking into what Target's going to do. Christmas season, look at what Target's going to do. If you look at 4th of July, any major events, sometimes you can look at Target and anticipate things happening. Tesla. And I skipped Rivian on accident in this presentation and such a long recording. Not going to go back and rewrite it, but Rivian is another really good one on here. So where Rivian and Tesla, same as Lowe's Home Depot, when market's strong, Tesla tends to run more than Rivian. When market's weak, Rivian tends to break down more than Tesla. So Tesla, much easier to play later in the week, but again, amazing mover. Any given day, you could have a 100-point move in Tesla. The money's to be made out there. It's just a matter of, are you going to get one of those weeks where it chops around for the first couple days and then moves, or are you going to get one of those weeks where it does it all and just runs like crazy? So I haven't given as many Tesla alerts lately, but it is a stock worth watching. It's a pretty interesting name. So keep Tesla on the radar. Taiwan Semiconductor, another name, just same as all their chips. Lot lower open interest than an Nvidia, a lot lower movement than an Nvidia. So prefer to play Nvidia and AMD over like a Taiwan Semiconductor, but it's above that $100 range that I like. I think it's like 120 now, so worth watching. Like it a lot. Just haven't gotten any alerts on it, but do have it out there watching. Trade Desk. So TTD is another name that I really, really like. It's a great mover. It can have 10% plus moves any given week, almost what seems like any given day. It could move up 10%. And the options really let you make that money on it when those moves come. You can get burned a little bit because it's so whipsawy, but I do like TTD a lot. It is a good mover. You do get good reactions out of it. So keep TTD on the radar. UPS, similar to FedEx, good mover. You can time it around events, holiday season, shipping season, any news events that come out saying about work from home, stay from home, more shipping that has to get done. Don't trade it quite as often, but worthwhile name to have out there. Upstart. Upstart is a crazy mover. It feels like it's always up or down 10%. It's back down to $100. So you won't get quite as massive as a move as if you were doing stuff when it was closer to $300 or $400. But the potential for jumps are still there. The option prices are a little bit high, so I like to kind of wait till later in the week for Upstart. I haven't given many alerts on it, but it is a good mover. It works really well. It has that juice in it, so Upstart worth keeping on the watch list. The VIX. The VIX is only on the watch list to see what the volatility in the market is. So if you made it this far and you want to learn more about the VIX, I have a whole video on it. Basically, VIX is high, uncertainty is high, but the video goes into full detail on what the VIX is and how it works. So if you want to learn more about the VIX, check out that video. Wynn Resorts. Wynn Resorts and Airbnb, pretty similar names. Both good movers. Wynn you can sometimes get some pretty great moves out of Wynn, especially for an $80 stock now. Like every now and then you'll see Wynn have like these 5 or 10% spikes out of nowhere, and the option prices are really cheap. But there's a lot of times where they just kind of grind and hold it out and don't see a lot of movement in them. And Zoom. So Zoom, pretty interesting. Can go up, can go down a lot, but it's not quite as news driven as before, but I haven't traded it a lot. I traded a few months ago when COVID and the pandemic was more of an issue, and you could see kind of that multi-day swings. But you're not getting as many news breaks or as many either up or downside news breaks that's going to drive it one way or the other. So good mover, but not as much as before. So haven't traded it lately, but worthwhile to have on there for opening and closing names. And with that, that is all the names on the JPATrades official watch list. So thanks if you stuck through all the way to the end. If you want to tell me, if you made it this far, tell me what's your number one watch on your watch list in the comments, and I'll go through and see which one I like the best. So with that, hope you all have a good weekend, and I'll see you next time.